I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market spent the week chugging upward with new highs coming daily. It's certainly not a trader's dream, with trading volumes and volatility very low, and investors, well, they just keep getting paid with hardly a moment's threat. There was a chorus of Fed heads out all week long, all with the same messages, as they worked to cushion the markets from a coming blow. With 4 of them out saying pretty much all the same, Fed taper is likely to come sooner than implied at the last meeting. And also there's a ton of economists coming out and saying the same thing. Not all the markets came through unscathed, however. Monday saw a flash crash in the precious metals. Gold overnight was down some $100, but then reversed quickly. Silver followed, the same thing, that bungee jump on the way down and then coming back, but silver actually much weaker than gold right now. And stock futures, they went down on Monday morning with the metals, but they recovered for a small change. And as every day, they have seen higher highs. Tuesday, the Senate passed the $1 trillion infrastructure bill, and that lifted stocks to small gains. And Wednesday, the CPI came out and showed inflation had slowed a little bit, and the reopening stocks soared. We saw the Dow Jones Industrial Average and the Dow Jones Transportation Average both moving up very strongly. Thursday, the PPI came out, and that number was huge. That was a 1% increase on the headline, and that was versus an expected 0.6%. And year over year, that number is 7.8%. That is a record number based on when they've been keeping the numbers. And of course, you go back to the early 70s, those numbers probably were bigger. And the stock futures, well, they had a brief head fake on that inflation number, and basically they've ignored it as they ignored everything else and went on to gain on the day in what has been a dreadfully slow market. Friday, consumer sentiment came out, and that took a dive, and that moved to the worst levels, worse than the pandemic lows that we saw a year ago. And bond market jumped on that news, 30-year moving up about 1.5 here on Friday, and as interest rates pull back a little bit. And overall, we think interest rates, well, they're not done going up. The stock market, basically, it's mixed. The Russell down here on Friday, and this is pretty much what we've seen, just the indexes moving in opposite directions for the last 3 weeks, but the market, moving up to new highs. So the bond market's stronger today, and that did help silver and gold, which have pretty big jumps to the upside. And actually, gold has a gain on the week after that big drop. So, but stocks mixed, and help came from Disney, which had very good earnings here on Friday. They're up to 116 million subs. That's better than expected, and their parks turned profitable again, which is miraculous after all of the shutdowns that went on during the pandemic. And now here with a big wave in the COVID Delta variant, they seem to be doing okay. That's good news for Disney, and of course helps the Dow Jones Industrial Average. And that made it 5 for 5 new highs, all-time highs for the stock market, at least as we measure it on the S&P 500. Some of the broader indexes not doing quite that well because there were fairly sizable corrections in some of the market sectors. Talk is picking up now about this Fed taper. as inflation rages, and the U3 numbers, that's the unemployment numbers, have moved down to 5.4%, so that's a big improvement. And now with the government now passing this infrastructure bill, though the Democrats are fighting about this because some of them want to get their $3.5 trillion bill passed first, so we're going to hear a lot about that. But the Fed expects that you're going to see this fiscal stimulus coming out, and that is a good reason for them to start talking about this taper. We saw in 2018 when they actually did a taper, the stock market moved down very quickly. But talk about it is not affecting the stock market yet, though we expect that it certainly will. We want to take a look at a chart in here and see if that gives us a little bit of insight about the condition of the market here as the Fed does begin to talk about tapering. Take a look at this chart right over here. This is the Fed balance sheet versus the Wilshire Total Market Index. This is the source here was recessionalert.com. Go take a look at that site. And here's what we want you to see, and that is this line right over here. The bottom line, let me just get the regular pointer out here, and you'll see that. This is the Fed balance sheet. What's really interesting is that this Fed balance sheet stayed under $1 trillion for all of these years. That even at that time seemed like it was a huge number. And then right over here in 2009, when the balance sheet started to fall off, look what happened in the stock market right over there. You could see. Then, of course, during the Great Recession and during a lot of issues that the country had, the balance sheet really grew over here as we had the QE1, QE2, the Operation Twist, QE3, and then all of a sudden the balance sheet started to peak over here. And you could see the stock market then had another correction right over there as we had a pretty good decline. So as the balance sheet kind of flattens out or pulls back a little bit, the stock market does have some periods where it struggles. You can see in here where the stock market started to peak, and actually Yellen started to look at, ending QE, and she did end QE, and then she started to try to raise interest rates into 2018. And as the stock market, balance sheet flattened out, the stock market went into some corrections in here, and then right over here as the balance sheet actually was falling in 2018 when they were really trying to normalize, the stock market had a big hit over there, which was some 20% or so. Here's the pandemic right over here, so that's kind of an anomaly. But since the pandemic, the stock market has doubled. It's 100% gain during this period, and look what the Fed balance sheet did. So you get a pretty good sense when you look at that the stock market movement is very dependent on the Fed, which is during this great experiment, which really began with Greenspan back in around 2000 when we had the dot bomb crash. That's when the activist Fed came in, and now we have a Fed that has basically taken over the markets, as you can see. And now if we're about to get into the period of normalization, the Fed taper, then you know that we're in for a period where the market can begin to struggle. I actually think that is coming. It's that returns for the stock market are going to be very substandard going forward. And with the doubling of the stock market here and the valuations just historic, you have about a 200% valuation of the stock market to GDP. There's a massive correction out there somewhere, and probably some bear market. We've done some big picture analysis where we show the cyclical patterns on the quarterly cycles, and that points out to 2023 for a bear market correction. We actually think that any significant stock gains in a period of this Fed attempt at pulling back on their balance sheet will be very, very small. There's a small chance you can get any significant gains, and a big chance that you can get a pretty good correction over the next couple of years. And a correction could be the average bear market being 30%. Nobody thinks that could happen, but I think it will happen. And this is just shows you that the market is very glued to what the Fed does. And if the Fed does begin to taper, the stock market is going to suffer from that. It's not only the stock market. Let's just take a look at one more chart in here. And this is the Fed balance sheet versus gold, which I think is very interesting. And we have a lot of people that write us about gold and gold analysis. And we have said that we believe that the dollar is going to do better. And that the gold and silver markets are not going to have a great time of it. And look right in here. So here's that balance sheet. It's a little different color, but you can see the same thing. And as the Fed increased its balance sheet over here, then what happened was the gold market soared, as you can see. And this is where it went up to some 1900 right there. Then as the Fed got over here and they started to taper, you could see that gold really did not have a good time of it for a lot of years, like 5 years. It was a real struggle, 5 or 6 years. And then when the balance sheet took off right over here, you can see the gold market took off also, got up to 2000, right? But really it's underperforming, as you can see right over here. So gold is not in great shape. So if you look at here from where it was under $1 trillion in the balance sheet to where it went up 10 times. That's what the balance sheet did right there. The gold during that same period went up about 4 times, 400%, and it's really struggling now. And I think investors are really getting ahead of what they believe is going to be a period of tapering, and it's not real favorable for the gold market. And the gold market has acted very bad on days that interest rates have gone up, and doing better on when interest rates have come down, like today here on Friday the 13th. Friday the 13th, I didn't realize that, where we have the bond market going up, interest rates falling, and then gold rebounds. It's pretty typical of what we're seeing. Gold, relative to the movement in the Fed balance sheet, I think is pretty clear when you look at that right here, and a Fed taper is out there, and a period of gold struggle is coming. That is the opening that I'm going to show you. Let's just talk about what's happened here in the stock market. For the week, the stock market is fractionally higher. Overall, the S&P 500 and the Dow Jones. The NASDAQ has tiny little gain in there, barely, and the Russell actually is down on the week by a small amount. Bond market about unchanged, up a couple of ticks. The 10 years down are up about 1 basis point. So it really hasn't changed very much. I did a future speak and a big picture analysis this week where I talk about the bond market. That big picture analysis on bonds, on Treasury market, I think is really interesting. And I look at some history around the Fed actions for the last 20 years, and I think you're going to find it pretty amazing. You need to be level 2, 3, or 4 to watch that video, so I encourage you to sign up. Gold market, well, that flash crash came on Monday, but then it rebounded and actually is now up about $10 on the week. Silver is still down about 35 cents. And we do believe that the gold market will probably make it into the low 1800s before pulling back again. Dollar was up, but ended the week down about 0.2%. Here as it's falling pretty hard on Friday, maybe closer to 0.3 right now. And it's still up for quite a number of weeks, and we still think that it's going to head up for quite a number of weeks for the dollar. So talk about that dollar analysis all the time also, especially in future speak. Oil market with a tiny little gain on the week of just about $1, and we think that the oil market is in a period of risk. It's in a rebound now, but I think that it's going to be moving to the downside again. I think there's an important trade coming in the oil market for swing traders, and keep your eye on our Future Speak show for that information, where that trade is likely to come. I'll give you a little hint, and that when that setup comes, it will probably be on the long side. All right, so now coming up in this market week, we're going to take a look at the tech stocks, because I think that's so important to the analysis that we do now. We'll do a little teaching on cycle analysis, and we're going to take a look at the stock market in a short-term view. coming up right now. Again, take a look here as you might want to make a little copy of these charts right over here. That is the balance sheet and how it affects the stock market, and this is the balance sheet and how it affects the gold market. Make sure you go to the askSlim site, explore, subscribe, make sure you share the information there so that other people come and watch that. If you're new to askSlim.com, become a free member, or I'm going to tell you about our level 1 special coming up, so please join one of those ways. If you're watching this on YouTube, subscribe to this channel and click the notification bell. We do many videos every week, and I think you will learn a ton from us. We have an amazing analytical team, a growing analytical team now, as we're about to add some analysts. And please do give us a thumbs up, like this video. If you're on Twitter, follow us at askSlim. For information on anything we present here on our website, on our memberships, huge offerings of education and analysis, write to Matt at askSlim.com. Let's take a peek at the techs. I think this is very important. There's some buying opportunities actually coming ahead, but are the semis dead? We're going to take a look at two little sectors of the tech market in here and some of these charts, and do a little teaching around our style of analysis as we get there. There are three major components to our cycle analysis that we present, and that is actually the movement of the market, which has periodic waves, which we show you. It's money flow. It's not anything very esoteric, just a way to look at it. And we look at momentum indicators, which are ultimately very important, and also at what we call swing high, swing low analysis, so that we identify the most likely places that it will find support on the downside or find resistance on the upside, or to be able to project even to new highs or new lows. So that's the core of what we show. And let's take a look here at XLK, which is really an interesting chart. Now, if you look on the bottom, you'll see that we have these cycle brackets. These are a drawing tool that is available on many of the charting programs you may look at. We use it on Thinkorswim, which is what you're looking at right now, which is our favorite broker, and you can, of course, easily use this if you have that, or on TradingView also, which has some beautiful versions of this also. And what we're looking at here are the real cycles. So this is the ideal cycle that says there's rising phases and peaking phases and declining phases. And this is how it resolves itself based on the momentum conditions. And when momentum is pushing up, it's going to have the cycles configure bullishly. That would be higher peaks and higher bottoms, as you see. And it will also translate bullishly, which means the peak of the cycle will be on the right side of it when you see that when it's bullish. When it's bearish, it's going to peak earlier and it's going to fall harder. In this case, what you're looking at are the XLK cycle patterns pretty much match the stock market. So if we can project and do project the XLK, we're going to get some sense around what's going on in the stock market. And while we were looking for a correction in the stock market, which has not shown up yet, we can see here that the upward momentum in here in the techs has really been helping the market, and there is an alignment of corrective periods here that go out into September. Well, some will say yes, Slim was looking for a correction in July and looking for it in August. That's true, but the market leaders have prevented that with all of this money coming into them, and I can only tell you what the data is in the market now, and that is suggestive of the fact that this is an uncorrected group, essentially, that it has just simply slipped to the upside, and you can see it really not making a lot of ground in here these last 3 weeks, as the market has pretty much done the same thing. So the leadership is kind of losing its energy on the upside, but not significantly giving you any information. So this is, the market leaders. And here we'll look at a few of these and give you a sense. And then we're going to look at the SMH, which are the semiconductors, which I think are giving a little bit of a different message. But this is important that based on the shorter term analysis and the analysis on some of the heavyweight stocks, it suggests that there will be a modest decline out over here into the September period, and then gains out over here into October and potentially into November. When you look at that. So that's somewhat different from what our analysis was months and months ago, which we thought would be peaking for the year. But this gives a different picture, because it really looks like the peak for the year is going to be October or November based on what we see here. So that's XLK. Let's look at a few of the stocks. Now, Apple's the heavyweight, of course. And you'll see in here, Apple, let's just take a look at these last few cycles right over here. You can see this cycle right here. The bottom came right here. It had a minor cycle, 2 minor cycles make up that, and here are your 2 minor cycles. And here is your first minor and your second. When you get the 2 of them coming down together, and this is the XLK, as you can see right there, then you get these bigger declines. And back over here, we had, when we were talking about the March target at 115 to 118, here it got down to about just under 116. So it hit that target there in March. That was pretty perfect. And here there's the August-September target on the downside is 137 to 140. As you can see, it projected down over here under 140, and that's about 3 weeks away. So that's suggestive of Apple getting a little bit of a pullback in here, but then moving up. So you can see when you look at this, this is really a buy zone here. If you get a pullback, it's likely to be moving up to all-time highs. And that is suggestive of the stock market not ready yet to make its all-time highs. This is quite a powerful pattern that you're looking at there in Apple. Let's look at a couple more of the market leaders in here. And you can see Microsoft, well, that's almost identical. Looky here, as you get the low here, look at how the nest comes right there. The nesting, you make the low, the nesting, you make the low, the nesting, you make the low, and the nesting here, well, it hasn't had a downtick yet. And you see when you get positive momentum in this period of a correction, it doesn't go down far and it doesn't last long. As you can see, when you get a little earlier downturn right in here, as you see, it could fall pretty hard, and it did that. So we don't expect to see a big decline here, but this again is the buy zone right in here, and we would look for it to get under this area of 274 to maybe 265, and then be moving up again to highs. Boy, that shows you that it's not likely the stock market is ready to make its bull market peak yet. Amazon, take a look at this. We'll look at this is the last of the heavyweights. Amazon is weaker, and you can see that as it's gotten down into the support zone right now. There's your intermediate support and that minor low right there. Probably going to see it come down to about 3140, about 150 points from here, or maybe a little bit lower, and then turn up again. Now you see we don't have this one projected up to a new high because of the depth of this decline. It might be giving us a warning in here. So still, this looks like about 3 weeks out. This points out to the second week of September for the correction, and then moving up. You can see in here where these 2 stars are. We're kind of showing you that there are 2 cycles that are nesting here and 2 cycles that are nesting here. And right over here is kind of the time frame for when the next cycles are likely to bottom. So we have a few weeks of potential pullback here in Amazon. And you can see, looking at these heavyweight stocks in here, that it all is in alignment with the likelihood of the NASDAQ pulling back and giving us a correction. We'll take a look at the short-term pattern in the NASDAQ a little bit later in the show. Let's look at SMH right now. And this SMH has got a very similar pattern. You can see that, and you would expect that they would align pretty well. This points to a decline out over here into the second week of September. And you can see right in here, there is some selling coming in a minor way, but still momentum is strong as we look at the reversal scout right in here. And just beautiful cyclic patterns. This is what we call a swamped cycle. When the momentum is so strong and the rally goes up so long in the cycle period that it doesn't have much time to correct, and it doesn't allow much of a correction, and you get another very strong cycle. Here you could see it corrected about 3 weeks, and then all of a sudden moved up again. So a strong cycle gets you a new high, a strong cycle gets you a new high, and then the low is higher than where the previous low is. And this again is a buy zone for the SMH. but we would look for a decline in here to about 247, and then again moving up to all-time highs, coming out into October and November. Pretty good alignment in there. Let's look at, I'm going to show you right now 5 different semiconductor stocks, and this is a mixed group, and there's some stocks in here really to avoid. Not all of them, and some of them look pretty good. NVDA, which is a heavyweight in the NASDAQ, you can see in here this is a very strong stock. The patterns in here are quite good. This is interesting because you can see this cycle right in here. That cycle really looks like it is equal the lows right here, and usually when you get that, it's hard to get the breakout. But this group was so strong, once it broke out above that high, it exploded. And here you could see momentum in here starting to flatten out here in NVIDIA, and this points timing-wise to a low over here coming in late August to potentially out as long as into October. So we don't have quite the alignments in here in NVIDIA, but this does look to us like there's a potential for a decline out over here. So we'll look for it into September in NVIDIA. And the next stock we'll look at is AMD. AMD really has taken over as far as a lot of the semiconductor usage and all of the mobile usage that's out there, automobiles and everything. It's just, they've done a great job. And this gets up to that 161.8 fib extension and then pulls back. This looks like it aligns out to coming into the end of August, beginning of September, and then up again. So that makes this a buy zone here when it gets underneath 104, potentially testing this area of the old peak. 98.5 down to about 97.5. That would be, in our opinion, the buy area, and then up to new highs. But all of the semis don't look that great. And I'm going to show you 3 that are negative that I really think need to be avoided. And with some of this is affected by like Intel, which is not really kept up with AMD, Taiwan Semiconductor, which is really, I think, struggling with a lot of the Asian semiconductors, and Micron is not doing very well either. Let's take a look at this. Here is Taiwan Semiconductor, and this really gives you a different picture, doesn't it? Well, again, the timing really says it's going to be coming down over here into September. And that then moving up, but you see the resistances in here. So we don't project it moving to new highs. And if anything, we think it's a sell now and potentially a sell when it gets back up over here later in the year in November. So a decline and then a rally, and depending on where it hits on these confluences of support, we will then project up where we think the next rally will be. But TSM really looks terrible when you look at that. Intel also looks bad, and as a matter of fact is one of the worst looking tech stock charts that we have. You can see in here the cyclical pattern comes down into the buy zone, really powerful upward momentum driving it up, and when the slim reversal scout moves down over here with some time to go, it cracks, as you can see moving down right over here. Earnings report was really disappointing back 1 quarter ago, and then the report came out over here, and that didn't help either. See this major cycle low? This was the 61.8% also, and if it gets under there, it's a breakdown, and it did so. It has a ton of risk in this next 4 weeks, and then likely to move up to another sell zone right over here. So this is what cycle analysis and momentum analysis and swing high, swing low analysis does for you. Is it gives you a sense of direction, it gives you a sense of money flows, and it gives you a sense of location. That is also important. And what we're looking at now is risk here to the downside, and then a rally that really will need to be sold when it comes in there. So that's a look at Intel. That looks really bad. And Micron looks very sick when you look at this stock right here. This is, you can see the 3 cycles that we're showing in here. It's coming to the end of this cycle, 3-4 weeks, likely to get down under $65 and then bounce to the resistance area that we have in there. Once the momentum, you can see momentum turn positive right here, and that confirms the cyclical bottom right there. And then when it got, to where it should correct here, the momentum never changed. It was positive and set new highs. Moves up to the 61.8% fib extension, and then that comes off of these cycles here. And then when momentum turned negative, it was a real tell, and it has been that way ever since. Couldn't get through resistance here. Another resistance level established right here, and then gets this whackage that you see. This really looks like this stock is headed down here to about 63. And then a bounce that takes you to, if it gets to 63, this resistance is going to be lower, and then probably another move down. So Micron, really a bad looking stock when you look at that, and that is, really tells the story of the semiconductor stocks and why they're a mixed group, and they don't look as good as the rest of the tech. So, that's a peek at the techs. Really what they're saying overall is that they are likely to help the market to get into the modest correction. We've upgraded the correction that we believe for the NASDAQ will be between 5 and 8% to the downside. And that looks very much like the timing all suggests that's out into September. And that some of these tech stocks look like they're very powerful buys if we get that dip to move up to new highs. Then I showed you 3 of these semiconductors that do look terrible. I don't think the semiconductors are going to give you anywhere near the return that you'll get on some of these other stocks that really look much stronger to me. And if you want to get the, a broader picture of what some of these tech stocks look like, you have to wait for us to do a stock sectors video for our members, level 2, 3, and 4. Or if you're a level 4 plus member, you can request some of those charts from us. So this is a peek at the techs, and I hope you found that very, very valuable. All right, this is the special we're running last week and this week. I really want you, if you're just first peeking in at askSlim, or if you're a level a free member, then this is really the time to take advantage of this. I'm going to show you some amazing things that are on the list of that you see right over here. The momentum tracker, stock index report weekly, ETF weekly, and the Market Week Show archive, our replays, the workbench. All of this is just absolutely amazing. The workbench is being upgraded right now, where you can organize and prioritize and save and track all of your work and your analysis. But I want to show you this, which I think is just absolutely incredible. I'm going to take you through this as quickly as I possibly can. This is the momentum tracker. This is an app that we built with our proprietary algorithms in there to show you the condition based on our momentum studies. So what we're looking at here is the NASDAQ 100. You get the symbol, the company, the directional bias, a outlook of 3 months plus. These are a little longer outlooks, which is what our directional bias looks at in here for position traders or investors. And then you can get our measure of what the momentum conditions are for long-term, intermediate, or short-term. You can see in here the directional bias ratio has about 59% bullish right now and only 11% negative in the NASDAQ 100. So that, supports what we've been saying, that you're going to get a decline and then the market move back up. Let's just look here at directional bias, and here's you get a sense here of the very bullish condition right over here for Xilinx or CERN or Ulta. These are just really bullish conditions, and I'll just slide it down a little bit so you can see CLAC and Comcast and AMD. We just showed AMD how bullish that is when we looked at the chart. And if I go here to and click bearish, you can see that some of the stocks that are very bearish in there. Just great information. And let's just look at Xilinx on the longer term chart right over here, and you could see our signals right there, and all of these things that have been positive all through here. It's gone from very positive to positive, very positive, very positive. All of that you can see on the chart. So this is just absolutely an amazing app. There's over 1,000 symbols in here, and our canned groups in here that we put. There's tons of them, as you can see, and you can look at the individual groups, or you can just look at symbols. You can scan the groups. You can see which are short-term, negative or positive, or intermediate term as you sort through these, or long-term. Just absolutely amazing app, and that's for level 1 with all of this information. You also will get our weekly. This is the stock index cycle and trend momentum report. This is the SIR for weekly, and you can see in here all of the reports that came out. I'm just going to click on this one right over here and take you through this very quickly, and you'll see all of the information that's in here. This is for this comes out on Wednesday, so this is last Wednesday, and I'll show you what's in here. Here's the charts, so you get our charts right there. When you look at that, beautiful work. You'll get our short-term outlook with all of that showing you what the information is in there. You'll get our technical summary, which gives you just tons of information about the condition of the SPX or the SPY. Intermediate term outlook, longer term outlook, all of that in there, and you will get our technical evidence summary, which shows you the comparison between the 3 major indexes from long term all the way down to that near term, which is intraday information. And then, of course, you will get our area charts, which show you the momentum conditions that are in each of these indexes. So just absolutely fabulous information you get there. You're also going to get our weekly Spider ETF review, and you can see right in here that you're going to get all of the information on energy and the financials and the industrials, technology. You get the relative performance on the individual sectors, all of them right in here, as you can see. Look at all of those bullishness in there. Consumer staples in the near term are a little more negative. You can see the consumer discretionary on the near term a little bit more negative, but all of these really good, except for the energy, which is bullish on the long term, but short term really showing you intermediate and short term as a negative condition. A little uptick there in the near term for the intraday, but that's probably the worst of them all, as you see that. Yes, you get all of that. You get the Market Week archives, where you can go back and watch each of these shows and learn from everything that we present in those shows, and you can get our special videos that we give for our level 1 members. Here's the cycle analysis basics video in there. And of course, you get tons more. All of those live shows that we do for our members, you're going to see the replays on those, as you can see right here. And I don't know if you're going to see 70 minutes of more valuable information with our members asking us questions and us showing them how we do the analysis. Just absolutely great stuff when you look at that. Can you imagine all of that we're going to give you, all of these things listed in here? It's $19.95 a month regularly, but we want you to get a shot for looking at us and to see what we really present. Special price for 3 months, $30. That's half off. That's $10 a month for everything I just told you about. If you have never been an askSlim member and you want to get a taste of what we do, or if you're a free member and you want to just upgrade, you're going to get this special $10 a month for all of that I showed you. Just absolutely incredible, and I'm telling you, you're not going to believe how much you will learn from this amazing team that we have here of analysts. So please do sign up for this special price. You can go to the top of the website, and we have a special place for you to click to join right up over there for the $30 for 3 months. And you can join. If you have any questions, write Matt at askSlim.com. If you're a free member and you want to upgrade, you have any issues about that, write team at askSlim.com, and Brian will be able to help you with that. All right, we're going to look at the stock market. Our focus this week has been on the NASDAQ, and we're going to stay with the NASDAQ as we look at the 1 to 3 month view. This is very much in line with the analysis we have shown you on the tech stocks. Now, if you're watching this clip and you don't know what I'm talking about, go back and watch the main show, and you will see the analysis that I brought on XLK and SMH and 8 different tech stocks. And I think you're going to find it pretty fascinating and what we have brought. To get our full analysis on all of the indexes, you have to go to our Future Speak show or be a member and get our charts, and that would be for level 2, 3, and 4 to watch that on the Future Speak show. All right, so there's Micron. Let's just move over here and we'll go to NDX. And we're looking at the cyclical patterns in here. So on the bottom are the cycle brackets. This ghosted one right over here is a 30-day cycle. And you can see where it aligns on the low here and right over here and then right over here. And then it kind of lost energy. And what happened really is that the 20-day right in here became more dominant, as you can see that. So we leave that in there because the 30-day may end up to be dominant. And it's really interesting is that it nests out over here with the 20-day and the 10-day all coming into this low in the middle of September. Now, if you followed the weekly patterns that I showed on the tech stocks, which are basically the NASDAQ, those all align to correcting out into this same time frame. So while we did not construct the complex structure in here yet, because we don't really have an anchor point, it is suggestive of the fact that you're likely to have a little bit of a pullback in here, then another rally, and then moving down for the bigger correction out over here in the first 2 weeks of September, basically, is when that risk picks up for that. So this, what we're looking for in here, and you can see the rhythm in here, the low right here as it lines up, the low right here as it lines up, and then what looks like should be a minor pullback right in here into the early part of next week, and then another rally. Well, next week we'll be showing you the complex structure. It will either align from this low right over here or from the low made sometime probably midweek next week, and then give you the full two different channels that will come in here and show you where the risk of turning over would be and where the high should go. When you look at this at that right there, that's about 15,350. If you got a break in here, it would make sense that 15,350 would be the place it could go up to, or it would stop at 15,184. That would be the two spots we would look for this next cycle over here. So the 1 to 3 week view really is that it comes down right in here and then gets a rally and then comes down sharply. This is really about 4 weeks from now when we're projecting the low and for the bigger correction. This would align with the 5 to 8% decline that we're looking for in the NASDAQ out here into September. But again, the momentum has been so unbelievably strong, as you see the slim ribbon in here. This correction right over here where these cycle lows came down gave you absolutely no downturn. There was no downturn in here at all in the slim ribbon. And you can see in here the slim ribbon PO, which gave you the positive signal there, gave it to you right over here also. And when you get into a period where the slim ribbon PO can't get under the 25, that is immense strength when that happens. You see that all happened right in here. It doesn't matter when it's green and gets overbought. That is not a signal. It is only a signal when it's green when it gets under the 25 and then turns back up. And that is a bullish signal. You can't get bearish signals unless it's red. And in this case, it's green. Momentum is strong, and we don't have any reason to believe that there's anything significant coming on the downside yet. And we'll see what happens if the slim ribbon can turn neutral and then negative at any point in here. Momentum extremely strong. The configurations of these patterns extremely strong. And that's why we really believe that when the intermediate low comes out over here and you get this decline, it's likely to just turn right back up again and then move to a new high. Because everything we showed in those tech stocks basically say that the real market leaders, the ones that weigh a lot in the NASDAQ, are likely to have pullbacks and then move up to new highs, and that just being a buying opportunity. So the correction in here that we're looking for in the stock market kind of pictured right in here. Still looking for the NASDAQ 5 to 8% out into September now, based on where these patterns, what these patterns look like. And then probably the bull market peak coming in October, November of this year. So that is the look at the short-term view of the stock market. I hope you found what we have brought you incredibly valuable. You can learn so much more about what we do by going to the askSlim.com website, become a free member, or take advantage of that new level 1 special that we just put up there. Subscribe to this YouTube channel, click that bell so that you know when we put something up. Like this video, give it a thumbs up, and watch all the member videos that we have in the playlist there, and a lot of things from past shows. I think you'll find it really interesting. If you're following us on Twitter, if you're using Twitter, follow us at askSlim. And then for information on membership info, questions on our huge offerings in education and analysis, write Matt at askSlim.com. That's it for this show. I hope you have learned a ton from us. You found it absolutely illuminating. I want you to be so careful. It is so crazy out there. And I'm always wishing you great trading.